All right, welcome back to CentralValleyTalk.com. I'm Mike Scott, joined right now by Phil Risch from Open Mortgage. He is a specialist in reverse mortgages, and he calls himself an old guy helping old guys.
That's me.
And old girls.
And old girls.
How are you, Phil?
Just wonderful, Mike.
All right, you have an office out in Clovis.
In Clovis.
Near Teagan, Minnewawa.
Yeah, by Buchanan High School.
Yeah. Oh, yeah, I know where that is.
Complex.
And you also have a website?
Website, philrisch.openmortgage.com.
Okay, because people don't have to come in and see it, right? They can do it all online, probably.
I don't like that.
You don't like that?
No, I'm not.
You're one of those old guys.
I'm an old guy helping old guys. I'm face to face.
Yeah.
I don't think you really get the understanding of the product by going through email. It needs education. When I meet with somebody, I generally spend the first hour in education, and we usually meet somewhere between 3 and 5 times.
Really?
Before we ever get an application on paper. So it's imperative that people understand what's going on with this loan for many reasons. One is they're elders, and so now you have this whole elder abuse question. And seniors are required to have counseling, so that really helps. And there's been some new laws and changes within the laws, and the law is constantly being tweaked for this loan. We actually almost lost this loan about 1.5 years ago.
Because there were so many people abusing it?
People were abusing. What happened previously was a senior could have a certain number of dollars they could withdraw from their property. Well, they'd withdraw it all and go up to the closed casino. But that time it was open, and they'd come back, have no money, have no equity, have lots of issues. So the federal government said, we better change this, and they did. They cut down the amount of dollars you could draw, how much you could draw in a year, and really tweaked it. And now another tweak is coming on March 2 of next year.
What's that tweak?
It's called financial assessment. Up until March 2nd of 2015, there was no credit requirements. No credit issues could stop you from a reverse mortgage. There are no payments, and therefore there's no reason to really concern yourself with credit. Federal government now has said, well, we sort of need to look at it. They're not going to not give somebody a loan because of it. What they're going to do is they're going to do what's called a set-aside, a life expectancy set-aside. Federal government figures we are going to live to be 100 for this loan. That's how all the calculations are made. They feel 10 years ago it was 89, so they're moving quick.
We've come a long way.
One year, every year we go, maybe
Wow.
115. But bottom line is, with this life expectancy and everything factors, age, interest rate, etc., they'll take a number of dollars, depending upon credit, your ability to pay, your desire to pay, your history, and put that money aside to pay taxes and insurance, which are the only two things you have to pay. So given these taxes and insurance are paid, it's set aside, they'll still make the loan. So the financial assessment isn't so much to take people out of getting the loan as much as protecting the borrower, protecting us, the federal government, because we're the taxpayers, and that's who's insuring the loan, and also protecting the lender.
Yeah.
So everybody has a better feeling and a better hold on the product. And at the same time, seniors still get the relief that they're looking for.
Yeah. We haven't really even explained what reverse mortgage is yet. It's where people can take a certain amount out of they have equity in their home.
Must have equity.
Instead of continuing to pay their mortgage, they get money back every month.
The equity pays the money to them.
Now the bank's going to own your house at the end when you die,
Not necessarily.
right? Not necessarily.
No, not at all.
Oh.
That's one of the
See?
big myths.
I'm misinformed.
There's the myth. The biggest myth in reverse mortgage. So I have to ask you a question. Do you own a home?
I do.
Do you have a mortgage on it?
I do.
Who owns the house?
The bank.
Really?
Well, until the mortgage is paid off.
Do they?
Well, who does?
You do. Who owns that house? The bank has a collateral interest in it.
But my name is on it as the owner.
If I go to title and I say who owns that house, it's not going to say Wells Fargo. It's going to say Mike Scott. Wells Fargo has a collateral interest. Okay. They own the collateral interest, but not the collateral. So, as in any forward mortgage, traditional mortgage, reverse, everybody that takes out a mortgage owns their own home. So now the question is what happens when you leave the home, for whatever reason it may be. The borrower, or if they're gone, their estate has 1 year to make a decision what to do. If there's equity in the property, in other words, the property is worth $400,000, You owe 280. There's 120,000 equity. The estate sells the property, takes 120,000 into the estate. It's all good, right? Now, at the other side of the coin, the property's worth 200 and you owe 300. You've lived to that 100 we talked about, right? You've been in this loan for 30 years. So now what happens? Well, the lender says, I don't care because I'm insured. You and I are paying the insurance, okay? So the foreclosure, and it's not a foreclosure, it's a deed in lieu of, basically, because people are passed. There's nobody to go for. It's a non-recourse loan, so the money then will go back either to the estate or the insurance of the federal government will cover the bank. Banks love the loan. They're covered forever. They don't care. I mean, the government is the one that's tweaking everything because they're the ones that are insuring it. They're the ones at risk. So for that reason, we're getting tighter and tighter. As they tighten up credit, they're loosening up dollars. So we have this little crossing, which is kind of nice. The question then becomes how many people would be affected by this? And the answer is about 7 to 12% won't be able to get a loan.
Won't be able to. Okay.
Yeah. That would have today.
Sure.
Okay.
Are reverse mortgages for everybody?
No. We'll start first with qualifications. You can't obtain a reverse mortgage if you're not 62 or older.
Right.
10,000 a day are turning 62. So there's a huge market growing, and it's continuing to grow, and it's been pent up because of myths like the one you brought up earlier. Oh, I can't do this. I won't own my home. I'm gone. But none of that happens. Okay. The bottom line is.
Well, I don't care who owns the house after I'm gone.
Well, but your children may if they're going to sit there loaded with burden, which they're not. Okay. It's a non-recourse to anybody. No prepayment penalty. I take the loan out. 6 months later, I hit the lottery. I decide I want to pay that loan off. No prepayment. So it's all good. I mean, it's a nice way for a senior. I like to use the analogy of a senior with a box of cereal. Okay.
A box of cereal.
Okay. So many seniors only get to eat the box because they don't have the money to buy the cereal. Okay? Not good. So the goal is to put the availability, the lifestyle, the aging in place that this whole project was meant to do in the Reagan era, which was when it was born, okay, 1981. So this is now, we're getting back to that so that seniors can actually. Another major change that occurred was that it used to be that if the borrowing entity was 62 or older, but his spouse or her spouse were younger than 62, they couldn't take a loan, or they could take the loan and the non-borrowing spouse was not covered. What that means is 12 years later, he passes, she's booted. Not good. So again, in August of this year, federal government fixed that, and now you can be a non-borrowing spouse. You can be there for the rest of your days. Does that ever come into effect? Well, yeah, I've got a fellow who's 94, actually, talking about a loan, and his wife is 55. I don't know if it was a marriage of convenience.
Well,
I mean,
shotgun wedding.
I admire the man, I must tell you. I have lots of respect for him.
Well, listen, I'm glad there's guys like you out there to sort through all these changes in the law, because it is very confusing, and there is a lot of misconception out there, and that's why people need to come and sit down with you, right?
Yeah, just get educated.
Yeah.
Get educated. Once you understand what's doing, maybe it's not for you, like you said. It's not for everybody.
But maybe it is.
But maybe it is.
Bill, thank you so much.
Thank you, sir.
Open Mortgage. Again, the website, phone number, how can folks reach you?
philrisch.openmortgage.com. That's the website. And my phone number is 213-9743. 213-9743.
Excellent.
Thank you,
so
sir.
much. Appreciate it. And we'll be back with more on Central Valley Talk.